this is, the intersection that we learned a lot, that the costs are just still high. And let's say if today we want to launch a chain together, I can guarantee you that you will be surprised with the costs. It's just not right. And we understood that, yeah, DA alone will not make it for the average developer, builder, or user. We need to start, figuring out how the supply chain, the induced demand, can be replicated across the board, not just on the DA alone.
GM everyone, and welcome to the very first interview on Finality, where we explore the business and economics of decentralized networks. If you have been following our journey from Friends Validator, you know we have been deep in the trenches of staking, validation, and infrastructure for the past couple of years. And now, under Finality, we are continuing that mission, but through a broader lens. We are looking at the economics, incentives, and the sustainability behind the systems that secure our beloved crypto networks. And I can't think of a better first guest to kick things off than Viet, who is the head of DevRel at Celestia Labs, one of the most influential networks in shaping the modular thesis and the entire blockchain era. With that being said, thanks for coming on, Viet.
Thank you very much for having me, Juri. It's always been a pleasure to talk with you in Berlin, IRL, and sharing memes and ideas. So happy to be here.
Yeah, the pleasure is mine. And let's start at the very beginning because Celestia was among the very first ones to actually ever talk about modularity when nobody had a clue what modularity was all about, talking about the memes. And modularity, high level, as you all know, is separating consensus from execution. And to this day, Celestia is probably the torchbearer of this movement. And we actually, I mentioned it to you in the episode preparation, we had Ismail here on the show back in late 2021, so peak bull run before Celestia launched. And we had a bold title for this episode: Is Celestia better than the final version of Ethereum? And to be fair, since then, the space and also Celestia changed a lot. You launched in late 2023, momentum was high, and TIA became one of the most discussed tokens in the entire industry. So today we will unpack, and let's start with that question: where is Celestia now, 2 years after it's launched? On a high level, what worked, what didn't work, and what's next? Maybe a super short TLDR to get things started.
Yeah. So what definitely worked was the great reinvention of the airdrops, I guess. A lot of people are right now technically doing kind of the same. That you're separating the general market who has helping you as users, and you are trying to, let's say a big thank you to those who have been contributing all these years. Developers, operators, you name it. That was a great success. Um, Modularity wise, I think we finally rebounded to a position I initially expected when all things launched on production, is the understanding of modularity. Not like, how to say it correctly. In 23, I remember everyone was so optimistic. It was beyond, sorry to say that, bubble.com optimism. So I was, if you look at the fundamentals, we back then launched maybe with only one roll up on top, and then things started to take off. But let's be honest, the level of adoption back then and today was just night and day. And finally, today, people are realizing that, oh, actually, modular blockchains take time. And as we all know, markets can be both very rational and irrational. And I think now, as someone who has been in the project since August 2021, it has been never more fun to work on this project than it was back then, because back then it was more about theory and let's hope the bet works. Now we see finally that the bet is working, but can we go from 0 to 1 another time, do it another one? And this is what makes me so bullish on the thesis, as well as seeing how people start to realize, especially unfortunate to the market behavior on Friday, how everything behaved. You start to see that people realize that, okay, we need some other forms of building products if we want some form of accountability, and not just trust that something went wrong for a millisecond, and then it liquidated everyone, and then it climbed up like nothing happened. Like I would say, this type of behavior is when you really need separation of concerns and good verifiable properties. Otherwise, what were we building?
That's actually a very good point to continue the conversation with, because obviously modularity is a fairly complex thing to measure success with, because I mean, with traditional blockchains, let's say Solana, even Ethereum is super complex right now with the layer 2 roadmap up. But I think Solana is a great example. You measure the TVL, you see how much traffic there is on chain, you do some metrics with volume, and then you can pretty much track, okay, how much fees have been generated, yada, yada, yada. And then you say, okay, this is a successful blockchain economy or not. Whereas in Celestia, everything is about how many people are building rollups, how many rollups are up and coming. You also need to basically measure the future. So how do you, like, what metrics are you using in order to track if you and the ecosystem are on track?
Yeah, I think everyone knows DA fees is what we track. It's a very important metric to us. This is why we make the big blocks. Otherwise, what's the point? You want people to have more saturation as they select a DA layer. Second point that we really look to is total value secured, meaning, let's say today you and I, we decided to launch a Yuri and Viet rollup, or Yuri and Viet sovereign network, whatever you name it, and we bring in, let's say, I don't know, 1 quintillion euros of real estate assets from Germany. I don't know. I just made it up, so please don't at me. Then for us, the total value secured is as important as DA fees, because we know, as you know, verifiable data availability layer is what people pick, and if they can trust the value that they bring to the table for that DA layer, that connects the economy for other rollups. This is where, you know, lazy bridging comes in. Otherwise, why you would be bothered doing lazy bridging if you know that you don't care about the value that is on top of you. So this is where we decided to take on interoperability route, because we know that the economy is what, you know, when people trade between each other, not just projects in silo. For example, in a lot of L1s, they just treat their own blockchain as a, let's say, in some way or form, very protected economy. But we all know that the modern economy is heavy supply chains, heavy connectedness, even if the political landscape is not, you know, very friendly to it. Like, we will not get away from this type of economy, and the same will go with blockchains. Thus, yeah, we value total value secured. And last but not least, I think what has been really important into the on the table of discussions, let's say in the community, and we internally have been thinking a lot about this, is of course some form of sane economics that will not, let's say, dilute people for no reasons, because it has been done years and years and years and no one cared. So as you might have known, we also started exploring ways how to reduce inflation as part of the community effort, as well as, hey, maybe proof of governance can be a good idea. But yeah, just 3 points, I think.
Okay, so basically a mix of TVS, blobs, like on a super high level.
Yeah.
Interesting. Interesting. I mean, yeah. I mean, again, as mentioned previously, yeah, it's very, maybe it's like also very complex for a lot of people to grab this idea, because yeah, modularity is also something that's still relatively new to how people imagine the blockchain industry to be one day. But I think it very aligns with what the future holds. So yeah, we see more and more networks, not specifically blockchains, but also L2s and so on and so forth. So I think all of this kind of comes together perfectly well, right?
Yep. Yep. Yep.
Amazing. But you also touched base on one point in the very beginning. We're talking about early 2024, or like end of 2023. And the TIA launch was, yeah, let's say it, pretty iconic, not just because of the token, but because of how viral the staking plus potential airdrop narrative became. There were, or are still, a lot of memes all over X. But the airdrop matter is, and I say this as someone who has spent a lot of time in the Cosmos trenches, is a double-edged sword. So you have short-term hype, but always missing out sometimes on long-term engagement. So coming from a slightly critical but constructive lens here, do you think Celestia could have done more with that early momentum that you talked about in the beginning, especially when it comes to developer onboarding and bringing new teams into the ecosystem? Because usually what early teams are looking for are ecosystems where there's really traction, and you see it on Solana and Hyperliquid nowadays. So what's your reflection on this hype phase? Do you think you could have done like you could have capitalized on this opportunity a little bit more to get more traffic on chain that we have seen it today?
Yeah, so two parts here to the answer that I have. First one, I don't know what happened. Maybe, it was the kind of bubble.com optimism. Someone came up with this idea, not in Celestia Labs, just to clear out the records, that once you start staking, the airdrop will continue. I don't know what happened. In the deepest trenches, with my friends who saw the launch also, they were asking me, is it true? I
Probably
said,
a Cosmos
no.
user.
Yeah. I said no one. Like I know, Celestia co-founders for so many years. No one even in any taxi drives back home or in the trenches of debugging ever told me that. Like I don't know what happened, but it happened. We should have, I think, better contained the messaging. I think you learn as you go. That was very unfortunate for us, but now we learned that you need to control some way or form of expectations towards your users, like why you do this. And the second part, I think, which is becoming more true, I have this fun sentence that I tell to my friends, is launching a full-fledged blockchain like L1 with your validator set consensus is for billionaires. It's a billionaire technology. And the networks and chains that we have right now, the modular one, they are created for millionaires from the market that I see. Well, so the question is why we why we why we're not making it achievable for everyday people. Like that's insane to think that after we launched the protocol, we thought that is done. Like the DA fees are low enough for people to not care about this. But when you factor in a lot of operational costs on top of with third party infrastructure, that is still insane. And we have been beating our heads all these years on how to make it lower. And still to this day, I think no one has figured that out. Like, that cost is still following all other monolithical ones. But, for the average developer, it does not matter because they just use it and pay as they go. But when we're talking about fat app chain thesis, that is insane. And this is, the intersection that we learned a lot, that the costs are just still high. And let's say if today we want to launch a chain together, I can guarantee you that you will be surprised with the costs. It's just not right. And we understood that, yeah, DA alone will not make it for the average developer, builder, or user. We need to start, figuring out how the supply chain, the induced demand thesis that Mustafa said, can be replicated across the board, not just on the DA alone.
Yeah. And I mean, maybe this already leads us to. I actually plan to follow up on this at a later stage, but I think now it fits perfectly well here into this question is obviously the operators and validators' role in the ecosystem, because these are like these third parties that provide different pieces of infrastructure, not only validation, RPC nodes, relays, yada yada yada. And yes, it is pretty expensive because you basically pay. I mean, how big is the Celestia set right now? I think 90 or something, right?
It's around 100. Yeah, it's
Yeah, around
100.
100. So you basically pay 100 companies that run mostly professional infrastructure. Yeah, that's a lot of money, like monthly, and after a year, we are talking about millions that you pay other people to run your infrastructure, but you also need them because otherwise there's no decentralization. So the higher the decentralization, the higher the price. So how do you think all of this will play out? And more specifically, what role do you see for validators in the future? Because also validation becomes more and more a commodity. Providing and staking integrations is much easier today compared to 5 years ago.
I'll be honest with you. This is where I think I hope I can come back to another episode with you and share a little bit more what my honest thoughts have been on this. But I think this is where today, if I was a validator company, I would have been the most bullish on the scene because people are finally talking about that supply chain issues are so expensive, yada yada yada. And it just takes, my bet is, it just takes one good dev team to figure out the Airbnb, Uber style of additional add-on services for users that allocates that compute to validators. Like as simple as it can get. If we do this, validators will become at the intersection of all economic activity because they run all the software, they know how to do it professionally, they need to, go beyond just providing RPC services, block explorers. Let's take this as the Cosmos example. RPC services, block
Relays.
explorers, relayers, yes, and maybe auto compounding. Yeah, auto compounding, the latest one. And they all said, I talked with them, and all of them just tell me honestly, like, bro, I want to do something more. Like, this is ridiculous. It's 2025 and we're still thinking about 2019 or 2021 when IBC went live. And I feel them because I know that you want to progress in your operation business. And yeah, I think we have just scraped a little bit as an entire industry on this add-on services. First one was Flashbots, insanely good product. Everyone who was running validators on Ethereum, who plugged in MevBoost, they had at least a decent fight versus the big dogs, but they could still be ballers. That was an amazing product. Second one, the add-on service was Jiro. To be honest with you, when Solana went through its horrible days in the protocol's lore, when I saw the Jiro white paper and how they developed the product, I just understood that, oh my God, this might be one of the best things that happened to a protocol that people don't understand. And I saw this rally from validators that accepted Jiro and they decided to run the add-on services. Fast forward to the Pump Fund meta. Well, as you know, a lot of validators made a lot of money on tips. So that was the second good use case of add-on services for validators. And I think we just had two products. And if you think about it, it's like, we are basically going back to this insane 2020, 2021 days when people were just running the Beacon chain on proof of stake of Ethereum just because of fun and memes, and Lido came in. Like everyone thought that that's enough. Like you don't need to run more, but that's not true. Like now, due to the supply chain changes, modularism, the amount of services that is needed for people to launch app chains has become so much more that I believe being a validator in the game has now become, the moment of, okay, 5, 10 years from now, it will not be possible to join the validator set, let alone provide add-on services because it will be just too late.
Yeah. So what specifically do you think validators need to do?
I
Yeah, to, for example, join the Celestia validator set.
I would say, for example, I'll just take examples that we did on block space race. When we asked people, to run full nodes, bridge nodes, light nodes, consensus nodes, explorers, make tutorials, etc. That exercise, we thought that, we'll do it for a very short amount of time and call it a day. I think that should have been a lesson learned that we should we should have continued such programs. Like it was kind of like a hackathon, but for validators. And I was, the recently I was my mind was boggled that we had like 3,000 people or something like this running all this, and they were giving so much valuable feedback, and now we just don't have them anymore. Like the chain has progressed. We went to mainnet, yada yada. But if I would have reverted back and said, okay, you have one of the vibrant node runners community. how you make them to progress with you the way that Cosmos did in 2018, where they taught literally everyone how to run a validated chain. Sorry, a validated node. And I think here we fall back to this question of training, make sure everyone is, let's say, equipped enough to deal with crisis moments, because validators is when decentralization is at risk and people need to self-coordinate to heal the chain. And last but not least, how to be so open and so out there for developers to serve their needs without building a product themselves. So do you see this like very subtle difference that validators should really focus on becoming the best operators professionals in the world, but we have a missing link, which is what software should they run? And before, the cope was RPCs and bridge and block explorers, because it was kind of obvious. But we need to go more than that. It should be bridges. It should be, I don't know, some analytics tools, or it should be relayers, but you get paid and people just fire up instantly. It should not be done the way that is very manually intensive, aka a dev writes to the validator team and then they go back and say, oh, we will get it to you in 1-2 weeks. No, it should be as instant as possible, and we haven't achieved that level yet. So once we do that, I think as an industry, I think validator business will become more lucrative than an AWS business.
So you are saying validators, for example, let's pretend you would be an independent validator, you would like to the Celestia set, you would be looking at, okay, what kind of product can I ship like this? Like integration ready, I build, I don't know, analytics dashboard or an analytics tool that
Yeah.
developers desperately need. Give me
Yeah.
foundation allegations and you have that product.
I would even go further that we should start thinking more about ways how to do credit systems, like in any cloud providers, aka, hey, dev, if you use my bespoke analytics tool that is open source, whatever, I will give you a I don't know, $100 in grants, fee grant. I think you know it. We're Cosmos people, and you can have an alt Z. I'll go, talk with. Magnitude of other people, will crowdsource from the community pool, whatever. I'm just making things up right now, in order for you to continue using this product and pay literally zero cost. But we all know, as validator operators, this money is flowing back to the economy. Like, it's not, the biggest tragedy for all validators right now is a lot of economic activity. Celestia is no exception to this. A lot of economic activity is flowing out of the protocol. That's the biggest problem. This is where for a lot of validators, this has been not only in Cosmos related chains, but also in Ethereum and on Solana. Inflation alone will not make you rich, and you need to keep the economy coming back to your doors. Otherwise, you cannot bet long term on the protocol as a business. And I think this is where being creative about making add-on services is so crucial. I'm not saying that everyone should start coding, but at least talking about this forces developers to see a market that they can address with their skills, that then validators can run. And to show you that I'm not, going delulu labubu and brain rotting here, proof of work in 2017, everyone who wants to see the lore of how crypto began, I still remember the marketplace on Ethereum when it was the proof of work chain. It was so simple that a dev creates a driver for your RX 570 or 1080 Ti's. You take their software, you run it as a miner, and you do a fee cut to them. What an insane economy. When I saw that, it hit me, oh my God, this will work, because devs are directly, incentivized to make sure that their product is being accepted by miners. Otherwise, they will not make any value. And for miners, it was so crucial to take the best software. Otherwise, you cannot get more mega hashes mined. And now in proof of stake, this model has been completely, let's say, demolished. And I think we need to go to such very good economics, because they produce so much value. Like, people were competing each day, both as developers and validators, and everyone. You can still go back to old Bitcoin forum talk, or Bitcoin forums and old Ethereum forum posts, everyone was talking about how to make better software because they were directly incentivized to get there. And I think this is the time why I'm so bullish in validators. I start to see that everyone is asking the same questions again. Yes, it's it's a little bit of a smaller community right now, but the fire is spreading out because everyone knows on inflation you will not get anywhere. You will not get there.
Yeah, like maybe like a good anecdote from us. So we used to be the biggest validator on FMOS in the early days. And FMOS was basically on paper, if you look from a business point of view at it, the most important client. Because like for 2 weeks it was responsible for 95% of the revenue. And now FMOS is dead. Now it costs money to run it. And this was 1.5 years ago. So, like, I mean, it was insane. Like early days, FMOS, it was like insane amount of money that we made per day. Like,
Yeah,
wow, like if I would just make this revenue with one validator per month, I would have been super happy. But now, like, completely different picture. So I think this is like also the other part of that story that I think you are indicating to is the life cycle of a blockchain, because inflation basically kills your client, so to say, further down the road, and kills your entire revenue. Not the revenue today, but the revenue with that client in 2 months from now, or 3 months from now, or at the later stage, maybe a year from now.
exactly. And this is what validators are afraid to admit, that you really want to have healthy inflation. What I'm trying to convey into a lot of topics when I meet validator teams and etc. is, guys, it's not about the inflation number that you see. It's about the underlying value behind the protocol that you want to capture, because this is what Jiro has been proving everyone right. Once the private mempools opened up and everyone was willing to pay double the price of the base fee, all the validators were like, you know what? Inflation? Who cares? Who cares? And the same was with Ethereum. We are ultrasound money. Who cares? I'm proposing insanely profitable blocks and I'm having money. This is what I think we should start looking, again into that good ethos of proof of work, where people were so highly incentivized to do value add-on services, because everyone knew just producing blocks will not get you anywhere.
Yeah. Yeah. And you're basically talking about two things. Like, one is like obviously building additional software in all shapes and forms, and the other one,
Yep.
like, I mean, I've seen it in the previous Celestia Foundation delegation programs, also like social factors, like organizing events, producing media, onboarding developers. Maybe you can talk about that as well.
Yep. So when I initially saw our first delegation foundation program, I need to work with the foundation council and explain to them how people are concerned, not concerned about each of the aspects. And I noticed that a lot of validators, they provide add-on services that you cannot measure on the protocol. Like, how can you on Earth measure someone who done a public good, let's say software? Like, how? Like, it's impossible. Like, you cannot like, and if you price them at the same level as everyone else, you're basically disincentivizing them to continue working on that. So I was thinking, and I was like, wait, we actually need to think about experimenting with validators who want to do something else. Like, they run the block production, blah blah. It's all fine and dandy, but one of them wants to take more developers into the scene. Amazing. How do you price that? You can't price that. Like, we haven't figured out a 1559 for this. Like, how can you do that? And I noticed that so many validators reached out to us when the second ecosystem foundation delegation program, oh my god, such a mouthworthy program, came out. So many of them reached out to us and they started proposing different solutions. And I was like, oh, I didn't expect that. I'll be honest with you, Juri. I thought maybe 3 or 4 will reach out, but the numbers just made no sense. And I started revisiting again the block space race that we had, where people were experimenting in different types of forms. And we selected a couple of them. By we, I mean here, I just shared the whole picture to the judges and said, hey guys, give me an answer, like an oracle, give me an answer. To whom should I talk? And now what I'm seeing is they are so autonomous in their own behaviors. They know their edge or they want to explore their edge. That was, the whole gist of decentralized tech is you want to let people cook. And why not make it as a better program, going into the future? Not in the sense that, oh, let's just stake even more money into this. No, let's think about a very sane incentive model, again, like in proof of work days, where people were basically building what others wanted instead of, just shoehorning everything that we thought everyone needs. Like, to give you an example, if we had 500 block explorers, it doesn't make any sense versus having good five. But the problem we have right now is no one is talking about what everyone is missing on a very, let's say, on a very loud uh, point of view. That developers that others are hunting to come to the any ecosystem whatsoever, they pay attention and they build literally for that. This is what we're missing because developers right now are being forced into only build for users, like retail. But proof of work in the days they were building literally in house the majority of time. The same goes to Cosmos days. Oh, build for all the sovereign chains to come around and dance together. But if you look at the Kepler wallet and back then, I think you can go through a quiz for who is the smartest in the room, and you would win it more often than you figure out how to use Kepler back then. Like there was so many things that needed help, and people were talking loud about this, but no one was paying attention to it. And now, finally, as we enter the phase of, let's say, validators being tired of running the same things and developers being tired to build for the same, let's say, small amount of audiences, I think we're going back to the nature of, okay, validators, you know how to run your stuff. We are developers. We can build the stuff that you can run.
Yeah.
And it's not about, hey, yes, it's only the Celestia Labs that builds the protocol. No, it should be a little bit more of just the labs. It should be, different parties building stuff that helps everyone make more money. And this is what I really miss deep inside myself, because I think that creates an insanely good economics for everyone involved.
Yeah. I totally agree with it also because the issue in the validator business is that again, the life cycles. I think also validators are like just tired of chasing the 1 to 2 or 3 chains that now launch with 20 validator spots. And you run
Yeah,
around
so
token
true.
2049. Have you seen the head of foundation delegation of X, Y, and Z? And then you run around at East Denver at whatever, and you think, okay, will this blockchain be relevant in 14 months from now? Yes or no? Probably not, but that's the only way to survive. And I think this is like exactly the thing that happened with validators right now is to see, okay, there needs to be a change because otherwise it's first and foremost obviously not good for the validator business, but secondly also not good for the industry itself. Because if we just build things and they build and die and build and die, and we have like a lack of sustainability, I think then we as an industry face a big problem because then nobody takes us serious from the outside anymore.
So true, Yuri. And just to cement your point, I remember hearing twice that sentence. First one was in the staking summit, whatever that was, a conference in Berlin Blockchain Week that happened this year in June in W3 Hub, when I forgot his name, but from staking facilities, he was explaining how, technically speaking, validator teams became hedge funds, and I was face palming. I was like, oh my god, those guys literal mandate was to make sure with their quality professional services we can have a decentralized foundation. And the second part was when Mustafa told me that, yeah, with current validators landscape, they look more like hedge funds than those, who we thought of in 2023. And I was like, oh God, like, that's the same narrative. Like it's popping up. And you're right that a lot of people are asking about sustainability rates. And this is why I think in order to prove sustainability rates, we really need to rethink how we bring developers that cook good products for validators to increase revenues. Like I'm not reinventing the wheel. I promise all of you guys. We need to stop pretending that it's just open source for the sake of open source. No, proof of work survived the horrible days of its existence since the beginning because people were literally focused to build products that make people money in a decentralized manner. And if we think that it's only DeFi, well, it's not. Like it is definitely not. It should be a combined effort across different sectors, like a real economy in real countries, that you need a lot of pies sectors to contribute to a single thing called the GDP of Celestia, or like GDP of Solana. You cannot just say, oh, on DeFi we'll survive alone. No, the world doesn't work like that. And I think this is where validators have been left behind pretty much brutally since I think only Jiro became one of the best things that happened to validators in the industry in general on how much revenue they could make. And I think this is where we have this amazing conversation that we need people to talk out loudly more, that validators are willing to give compute or capacity, whatever you name it, but they need someone to help them build products that can make their revenue. And just hoping that validators will build themselves one by one, you will create the worst market that can exist, because everyone will close source it, I guarantee you, and then no one will play by the rules. And this is literally what happened with Ethereum with MEV, that big companies said, haha, thank you very much for the leakage. We will not show anyone. And then scraping by the heads, Flashbot people came in and said, okay, let's try to fix it somehow. And so I think, in the nearest future, we really need to start connecting two dots. And it should not be, validators, you're separate, developers, you're separate, users, you're separate. No, it should be a very coherent discussion and a very coherent view on what we want for the economy of a chain X. Because just saying validator, you will, like even taking Celestia, point of view here, we will cut, let's say, in V6 2.5%. Okay, fine. Let's take it as a example. But for the validators, they will think, wait a minute.
Yeah.
How can I make it a sustainable business then, guys? Great question. Then we need to hear, what revenues, or what is their expectation in order to sustain a business, to keep the decentralization mode happen, because people need breads on the tables. And now you need to go to users and say, hey guys, what do you want? And then, we really have separated so many things and put it under silo banners and wallet garden it, that we forgot how it all started. And I remember in 2017, me as an ex-miner, I was following up on what users were doing on Ethereum, because it was just cool. And they were following up on the miners and developers community, because they thought that, okay, if someone can mine more, it means there is more power to produce more blocks. It makes sense.
Yeah, I mean, huge chicken and egg problems in the end. That's I think the main thing here. But yeah, what you just
I think there is hope, to be honest with you. What you have said about, hey, I want to be in the first 20 validator set. I think that's a very good question. Sorry, not question, but statement to make. What I noticed is it happened to Celestia back in 2021. You need to find your first validators that have so much conviction that they will run. If you tell them that you want to put a bottle as a blob on Celestia, they will just say, yeah, well, I'll do it. Like, I don't care. Because you know that they will stay with you regardless of what mistakes you can make or what progress you make. And we need to keep that culture of validators who both can have at least some way or form of sustainable business, but at the same time they have so much conviction. When you need them to try out this, let's say, alpha software, whatever, they really do it. And they don't do it just because you're working on the labs. They do it because someone else who's working on top of the Celestia DA layer, they need help on someone to run their software.
Yeah.
That is so obvious. And you need to keep that highly integrated 20, 30, 50, whatever validator set, more is merrier, of course, to be there on the first days and not to hunt each other down and then short the hell out of a protocol and then go to the next token 2049.
Yeah. Yeah, but Yeah, I mean that's also like a great key point here, because I think out of all of that, and that's my final question before heading to like a broader outlook. I think out of that desperate discussion, another discussion has emerged, which is all of a sudden crypto bros started to think about revenue for the very first time after burning billions of dollars in inflation. Oh, hey, wait a second, we actually need to create like some revenue in order to keep the show running. Oh no, shit, Sherlock. And yeah, all of a sudden this revenue matter came out of nowhere. And I mean, for me, it's crystal clear. It's unfair to judge a blockchain ecosystem with the frameworks we use to value an S&P 500 company. It just doesn't make sense. But on the other hand, I think it's also too easy to say, let's just ignore revenue and sustainability entirely, because this also doesn't work. Think of Uber, great example. Yes, they didn't make, they weren't profitable for years, but they had user adoption like crazy. We had thousands and 10,000s and 100,000s of people already using Uber daily or weekly in cities like Berlin, New York, Paris, you name it. And then all of a sudden, or like after, not all of a sudden, but after a considerable time, they went profitable. So, how do you think about this in the context of Celestia? Like, where do you think here is the moment, or like when is basically the product Celestia become net profitable? Like, is it we build the best product and adoption will come, or yeah, where's basically the strategy for sustainable value accrual long term from an ecosystem perspective?
Amazing question, Yuri. I think for Celestia, my personal take is to be in a position like TSMC, where you know the supply chain is so undeniably good that the biggest players come to your doors. Nvidia, Apple, you name it. They all need the same thing, which is a 2, 3 nanometer die. That's it. If you can supply them an insane amount of this type of hardware, you're good. And we haven't seen that explosion yet. And I don't think we should stop because let's be real, there isn't enough good chains, or there isn't enough good one single chain that could promise, that land to users about decentralized tech. We are not there yet. Like every single time we have a massive influx of people, either something is clogged, the mempool is cooked, transaction fees is so high, you basically priced out everyone. Like then we need to do better. And I think the revenues make so much sense if you know your customer base and you know you'll not go further. Going back to Anatoly's, fun tweet about you only need 5 smart contracts on your chain and you're good. If you only have 5 smart contracts, then yes, you need to start making revenue if you think that that's over. But in Celestial realm, especially with the paper from Alex and Guillermo about zero overhead data availability, if you want to achieve accidental computer, well, I think you need to know that revenue is important, but you need to worry more about the growth. Otherwise, if you don't have network effects around a single product that people want to build on top without losing exclusivity, how the hell you can promise good revenue models later? To give you guys a good example, Amazon was not giving back any dividends to their shareholders. Moreover, they were taking a lot more debt, and shareholders were kind of furious. The sole reason was they saw that AWS works. And they understood that, hey, we will double down on this business. Everyone will treat it as a meme. The cloud is a meme. We don't care. We will prove them by metrics. And once they achieved the first big customer sign up, which was Netflix, it took off. And today you can saw the headlines that people are making 300, $400 billion deals in clouds. Someone thought about it back in 2008. So it's a very long-term play. You need to provide revenue. Otherwise, you cannot win over the argument that you need to grow more. But it's not, at the level where you say, oh, we want to grow revenue so much that, you technically just a good revenue cash protocol, but you're not growing in size anymore. Like, it doesn't play much to the induced demand viewpoint that Mustafa is making.
Yeah.
As of today, let's put it this way.
Yeah, as of today. And I think that's like the perfect jump off point for like wrapping it up is where do you like what's your outlook for the Celestia ecosystem for the next 2 to 3 years? Regardless of bull and bear, there's a lot of noise in the industry, especially since the past couple of days, I guess. So yeah, where do you see the future of Celestia? What needs to be done in the next 2 years from now?
I think for the next 2 years, two things needs to be done. First, utilization rate of the block. I'm not talking about block size, but the block itself. I think it will be healthy to reach around 40% utilization rate. Let's say if we get to gigabyte blocks, 40%, good target. Second, validators should be more of a, let's say, bespoke, holistic runners of any software developers want on top of Celestia. The reason is why I'm saying this, we have one of the modes is run blockchains as easy as smart contracts. Well, you need you need some help if you want to make that happen. And I hope, regardless of the sentiment in the market, people will start value fundamentals above growth and above revenues, because everyone will see that the crypto pie chart is still too small compared to financial traditional markets. And we need to work very hard together on true fundamentals, on revenue streams, growth rates, rather than thinking about revenue today and then dropping the ball for another 3 years and not talking about that. Because to be honest with you, if you remember Ethereum miner days, everyone was hating the time bomb, the difficulty time bomb from Ethereum, because revenues were not good. So the rev meta was back then, but the pushback was not from think boys and think tanks. It was literally from guys in the trenches, the miners. They all hated it.
Yeah, but I think that's exactly the thing. It's like a topic that's unsexy to talk about because it's very, very complex. Because at the end of the revenue is a mix of infrastructure and builders and demand and supply and
Yep.
like all of these things that make an economy. It's like way easier to have anecdotes and academic discussions that lead to nowhere, rather Cosmos is a Byzantine imperium or something like that. Nobody gives us these were the discussions that we had in 2023. But after printing so much Osmo out of thin air for like the sake of inflation, I think business models and revenue should have been the key discussion point, or like how to make all of this like usable and like bring it to an audience that want to use it actually, rather than coming up with these things. Oh, we will figure this out later and maybe we will make some money with MEV, even though nobody uses it, so there is de facto no MEV. So yeah, I think a lot of people also have become a little bit tired of this. But man, so great to talk about this. Looking forward to see you in Buenos Aires. Maybe we can find a minute to pursue with this conversation. Always a pleasure to have you on. So yeah, thank you so much. As always, you can find all of the relevant links that we touched based on in this episode in the description box as always. Do you still want to add something yet? Something where should people follow you if they want to follow you more, learn a little bit more about Celestia?
Find me on X and find Celestia at x.com Celestia. It's pretty much straightforward. And I'm really thankful for all the feedback and critics that people share, both in DMs and publicly. It helps us to address and see the holistic market, not one person versus the other. And yeah, it helps build a sustainable, let's say, environment for people to work on. Otherwise, what's the point of having a decentralized protocol if people hate each other there? Maybe you should make it so it's a playground for everyone to, at the end of the day, make more money.
Amazing. Yeah. Thanks for coming on, Viet. Hope to see you soon.
Hope to see you soon. Thank you for having me. Take care.